Let's get to 1,000 subscribers. Please help support Joni and our team by subscribing and turning on notifications.
Wall Street really keeps us on our toes. Just yesterday, we were talking about Nvidia's earnings disappointing investors. But did you know the impact didn't stop there? Today, I'm going to tell you why other chip stocks tumbled alongside it and give you the latest hot news from Grandpa Buffett, who's on the move again in Japan. Let's dive right in. JOYUP Invest Podcast. Invest better every day. Hello, dear listeners, and welcome to Wall Street Wake Up, the show that wraps up and updates you on what's been happening in the U.S. stock market and markets around the world over the past 24 hours. If you look at the numbers, you might be wondering why investors were so disappointed. Nvidia's earnings per share, or EPS, came in at $1.04, beating the forecast of $1.01. Its total revenue also hit $46.7 billion, higher than expected. But here's the kicker. What really made investors sell off the stock was the company's data center revenue, which is its main source of income. It only reached $41.1 billion, falling slightly short of the $41.34 billion forecast. So why was this small miss so significant? The answer is simple: China. The main reason for this miss was that Nvidia didn't sell any of its H20 chips to customers in China last quarter due to export restrictions. Even though they've received a green light from the US government to resume sales, the company still hasn't shipped any chips to China. Colette Kress, Nvidia's CFO, mentioned they could generate between $2 and $5 billion from these H20 chips this quarter, but the situation with China remains highly uncertain. As I said before, even with strong earnings, a small miss on one key metric can send shockwaves. Investors worldwide see Nvidia as a key indicator for the entire AI chip industry, since its chips are the driving force behind so much of the latest AI technology. When the leader showed a minor weakness, investors immediately started asking, is AI growth peaking, or is this just a temporary geopolitical hurdle? This question triggered a chain reaction. Other major chip manufacturers were hit hard. We saw Advanced Micro Devices fall 1.6%, Micron Technology drop 1.1%, and even the giant supplier TSMC declined by 0.8%. While the chip news might seem gloomy, many other stocks actually performed better than expected, and their numbers tell us more than just stock prices going up or down. Let's start with the good news. The cloud company Snowflake, SNOW, surged over 11% after reporting strong earnings and a positive outlook. Its quarterly revenue was $1.1 billion, a whopping 32% increase year over year. This is a clear sign that investing in cloud technology remains a strong megatrend. It shows rapid growth and demand for large-scale data management and analysis, which is crucial for modern businesses. Similarly, another stock that showed strong performance was Pure Storage, PSTG, which jumped 14% after beating earnings forecasts with $861 million in revenue. This reflects the strong demand for its all-flash data storage solutions, which help companies improve performance and lower costs. On the other hand, the cybersecurity company CrowdStrike, CRWD, saw its stock drop 4% after its earnings report. Although the cybersecurity business is still growing, the company's revenue forecast for the next quarter was lower than most analysts had expected. This is a crucial reminder that in a market with high expectations, stocks can be punished quickly when they fail to meet those expectations. Let's wrap up today's show with some exciting news from the legendary investor, Warren Buffett. According to investing.com, Berkshire Hathaway might consider acquiring the railroad company CSX Corporation if its proposed partnership deal with another railroad fails to meet expectations. Analysts from TD Cowen believe Berkshire wouldn't buy immediately, but would wait for a problem to arise, as Buffett isn't currently interested in the merger's value. The fact that CSX stock has dropped over 10% recently also suggests that investors are uncertain about the partnership deal, which could present an attractive buying opportunity for Grandpa Buffett. Furthermore, Buffett continues to invest in Japan's major trading companies. He recently increased his stake in Mitsubishi Corp to over 10%, reinforcing his confidence in the Sogo Shosha group of companies. Like Berkshire, these firms invest in various sectors, and he intends to hold these shares for the long term. Before we sign off, let's quickly review the key lessons from this week's market movements. The stock market reminds us just how much influence leading stocks have. The fact that Nvidia's earnings didn't meet expectations caused the entire chip industry to feel the ripple effect. Another lesson is that high expectations come with high risks. No matter the company, if its performance falls short, it can be sold off quickly. But amidst all the volatility, we saw hidden opportunities in stocks like Snowflake and Pure Storage. And finally, the recent moves by the legendary Warren Buffett confirm that there are always great long-term investment opportunities in stable, high-potential companies. With that, I want to thank investing.com for all the great data for today's show. Now let's take a look at the individual stocks we've been talking about in today's JOYUP Forecast segment. We'll start with MUFG, Mitsubishi UFJ Financial Group, which has shown strong upward momentum over the last 3 years. The price has surged over 280% from around $4 in 2022 to its current level of $15.28. This momentum is driven by the Bank of Japan's move towards normalizing its monetary policy, which allows the bank to profit more from higher interest rates. The strong support level is at $13.50 to $14, while the near-term resistance is at $16 to $17. Long-term, I think the stock has more room to run, potentially reaching $18 to $20 next year if the Japanese economy continues to recover. CSX Corporation is a different story. While its long-term momentum has been impressive, it has recently entered a sideways trading range between $30 and $37. This reflects market uncertainty about the future of the railroad industry, which is closely tied to the overall economy. The key resistance level is at $37 to $38, and strong support is at $30 to $31. For the stock to break out, we'll need a clear sign of a recovery in the U.S. economy. Next up, CrowdStrike, CRWD, has a strong momentum, with its price soaring over 110% since late 2023 to its current level of $422. This strength is fueled by the continuous demand for cybersecurity. However, with the price so high, there's also a high risk of a correction. The key resistance is at $450 to $470, and strong support is at $380 to $400. Long-term, I'm still positive on this stock, but expect higher volatility. Pure Storage and PSTG has shown strong continuous upward momentum, gaining more than 300% over the past 2 years. Data storage is a key investment theme in the age of cloud computing and AI. The near-term resistance is at $65 to $70, with strong support at $55 to $57. I believe this stock has more potential to grow, possibly reaching $80 to $90 within the next 12 to 18 months if the demand for cloud storage continues to trend up. Snowflake, SNOW, has had a very different journey. After reaching a high of nearly $430 in 2021, it went through a sharp correction and has been trading sideways between $150 and $220 for almost 2 years. The main reason for this is fierce competition from tech giants like Amazon, Microsoft, and Google. The key resistance is at $250 to $270, and strong support is at $120 to $130. The stock needs a clear sign of business growth before it can break out. Finally, we have Nvidia. NVDA, which remains at the heart of the AI revolution. While it has had some volatility, its long-term momentum is still strong. The key resistance is at $195 to $200, and strong support is at $160 to $165. Given the high expectations, this stock needs to consistently beat earnings forecasts to keep climbing. Long term, I'm optimistic, but we must be aware of the volatility from various factors. All of this is just my personal view. It's not investment advice. Please use your own judgment and do thorough research before making a decision, because all investments have risks. Before we say goodbye today, if you're a stock trader and you have questions but don't know who to ask, feel free to leave a comment and we can chat. See you next time. Bye-bye.